Hello and welcome to a very special episode of Money Talks. I'm your host Shllok and today we have a very special guest. Our guest today is someone who has received the Achiever of the Year award in 2003, was a panelist on the first ever Smart Investment Camp organized by the CNBC TV in 2004, was featured as an investment wizard of the Indian stock market in the first series of Wizards of the Lal Street by CNBC TV in the year 2005, and has so many awards that if I begin to cover them, it would take the whole day. The ex-president of Kotak Mahindra Asset Management Company and current management director and CEO of Envision Capital, Mr. Nilesh Shah. Thank you for coming on my podcast.
Thank you so much. Thanks, Shllok. It's wonderful to be here with you on this podcast and looking forward to a very interesting conversation. But in the first place, many congratulations to you for at this such a early stage and early age of your life for having this initiative. So wish you lots of success and wish you the very best. Pleasure to be on this show.
Thank you so much. So today we'll basically be talking about your company and we'll be finding out how you'll invest and how do you pick the companies you'll invest into, and be diving a bit more into your investment philosophy and also talking about the Indian market in general. So just for people who don't know anything about Envision Capital, can you tell us what it does in very simple terms?
Yeah. So very simply, we are an investment management firm. We essentially help individual investors to kind of have better outcomes for their portfolios. So we essentially help them to construct portfolios and manage their portfolios by investing that portfolio into individual companies and build a diversified portfolio.
Okay, so basically you all help investors build a diversified portfolio, right? Okay, so I just wanted to know, when when Envision invests their investors' money, do you all look more into stocks, or do you all look at other forms of securities too?
No, we look at only stocks, which is publicly listed equities. So we essentially invest into the equities and stocks of companies which are publicly listed and are traded on the Indian stock exchanges.
And why stocks over any other asset group?
Well, that's a very interesting question, and I think the biggest challenge for any investor is to get a better bang for the buck, which is that today inflation is the biggest risk which any investor faces.
Yeah.
And the idea of investment is to be ahead of inflation. What are the choices an investor has? Either to put his money into a bank fixed deposit, which today on a post-tax basis earns 5 to 6%, or put money into real estate, which is very illiquid. So, and the third option is precious metals, to which there are limitations in terms of how much you can put. Versus that, equities and stocks have consistently over longer periods of time been able to deliver inflation beating returns which are better than bank fixed deposits. So from a long-term wealth creation, it is essentially a fantastic asset class and a fantastic investment avenue.
Okay, so
and the second big thing is that world over, everybody clearly believes that this is India's decade. And when the economy does well, businesses do well. And when businesses do well, companies do well. And when companies do well, their stock prices can also do well over the long term. And the best way to capture this growth potential and to participate in the Indian economy is to essentially be a shareholder of some outstanding businesses.
Okay, so it's very interesting. You said that this is going to be India's decade. I just wanted to know from a completely investment point of view, why does your company and why do you personally think the country of India is so ripe and so rich when it comes to investing? And what makes India different from previously established foreign markets, like wherein you all decide to invest primarily in India?
I think today India is at a very, very interesting juncture in its overall evolution and where it can potentially be. India today is benefiting from several mega trends. The fact that we are a democracy, the fact that we have very compelling demographics, the fact that we have a very young population, where majority of the people, Shlok, are in your age group, and the fact that technology and digitization are changing the ways we live, the ways we study, the way we do business, I think is these are some very, very game changers. And this, as a combination, apart from some of the other things like increasing urbanization, increasing industrialization, increasing infrastructure buildup, decarbonization, these are some of the factors which have all essentially coming up together, which is likely to and help India to sustain its position as the world's fastest growing large economy. And this is what makes India such a fascinating investment destination.
So I had seen a video of you where you were talking about why you like the fact that India is decoupling from the global economy. So just for anyone who won't know what the decoupling of the Indian market is, could you explain it in very simple terms, and can you tell us why you think it is so good for the Indian economy?
Most countries across the world, most large economies have challenges of an aging population. And therefore, they are facing increasing challenges in terms of growth. And their growth is largely dependent on the world economy. Versus that, India, as I mentioned earlier, has a very younger population, and we have a workforce which is growing and expanding by the day. And this is helping us to grow at a much faster pace. The share of exports in our overall economy is still very small. So our dependence on the world for growth is very little. And we are one of those very unique economies where our growth is driven largely by domestic factors. So, to that and to a very large extent, we are insulated from the challenges that the world is facing today in terms of growth, in terms of geopolitics, in terms of inflation. And that is why India is becoming increasingly decoupled from rest of the world. If at all, India now is well positioned to make inroads into the global growth opportunities, which can only enhance our growth. So, first of all, we are decoupled in terms of our domestic demand, but we are now increasingly well positioned to tap into the global growth opportunities.
Okay, perfect. And I believe in the same interview, you talked about the fact that you don't express the same sentiments as other investors when it comes to the Indian IT sector. So the Indian IT sector, a lot of investors look at it as a short growth, as it will surely grow. And a lot of investors think it will grow in double digits continuously for the next 20 to 30 years, wherein you have stated that you believe that the Indian IT sector will face problems. So why is your opinion on the Indian IT sector so different from the opinions of many other people, and why do you agree with what you think?
I think the IT industry has done a fantastic job so far. The fact that we essentially have revenues, or the size of the Indian IT industry is probably around $200 billion, which is more than what Saudi Arabia earns from exporting crude oil to rest of the world. So that is essentially the power of Indian IT and the size of Indian IT, the fact that it creates millions of jobs and supports lakhs of families in India for their livelihood, I think is honestly a very, very proud thing as far as we in India is concerned. However, when you get to a base of $200 billion and that your business largely comes in from developed economies like the United States, European Union, and Japan, these are all economies which are probably growing at 2 to 3%. So when you have these economies growing at 2 to 3%, their spending on technology is probably growing at about 4 to 5%. And so when you have these economies growing at 2 to 3% and I spending on technology growing only at 4 to 5%, I think it is difficult or challenging for the Indian IT companies to grow in dollar terms in double digits. You could probably have a few months or maybe a year or two where you can grow in double digits, but over the very long term, your growth therefore will be in high single digit in dollar terms, which I still think is very commendable.
Okay, so one thing that even I find personally, I find very interesting is looking mainly at the Indian IT startup space. By the Indian IT startup space, I mean startups like Nykaa, startups like Mama Earth, all these companies which have been brought into the limelight because a lot of them have started to go public. And this is also one main problem that a lot of investors are having with the Indian economy is the fact that a lot of these companies have been able to go public at values which much exceed what they are actually worth. Like for example, a company like Mama Earth was issuing its IPO at a valuation of 24,000 crores when they only made 22 crores in total profits. So I wanted to know from your point of view, do you think stocks like this when they are coming into the IPO cycle, do you think they are overvalued? Do you think there is any worth in buying early into these IPOs? And if not, do you think companies like Paytm, which have taken a very big beating in the Indian market recently and even till this date, do you think companies like this are worth investing in the long run?
I think startups are a very, very interesting opportunity, provided you essentially are able to understand what the long term potential of these businesses are. You should essentially not just be guided the fact that it's a startup and therefore it is destined to do well. That should not be the starting point. Finally, what matters essentially is to think about the long term and try and figure out where in the next 5 or 10 years these startups will end up being as businesses.
Okay.
Along the way, there will be execution risks. Some will work, some will fail. But I think as long as you have more winners and less number of losers, I think as an investor, you will essentially be fine. But it's very important that to assess whether this business is going to succeed or not, but it is even more important to assess what one believes is a fair price to pay. So I clearly believe startups at a fair price, I think, are an interesting proposition, but startups at any price, I think, is not necessarily a winning kind of a position, but perhaps a losing strategy.
Okay, so one thing very interesting you talked about is finding the right stock at the right price. So just shifting more into the focus of your company, what does Envision look for into a good stock? And just moving directly into your investment philosophy, Envision looks at the public sector from a private sector standpoint. So why does your company do that? Or if you have to research to find good stocks, how do you all do that? What do you look for in a good stock? And why does Envision basically think that looking at the public sector from a private sector and from a long run standpoint is a better approach to guarantee success?
Uh, So I think what we really look for is essentially what is the size of the opportunity that a particular company is addressing, which means that how big can this business become? So that I think is pretty much defines the playground for the specific company, that how big is this playground? I think that is a good starting point. Then one looks at what is the track record of this company in the past, what essentially has been its growth rate, how stable have the margins been, how it has managed to overcome difficulties and challenging situations, and is this today a champion or a credible challenger? And then lastly, you have to also keep in mind that how efficiently has this company managed its capital. So one is the strength of the business, and the other essentially is how good it has essentially used capital, or how it has been, I would probably use say the word frugal with using of capital to deliver better returns to shareholders. I think these are some of the important tenets. So I think quality of the business, size of the business, number one. Number two is quality of the balance sheet. How robust is the balance sheet? And third, essentially, is how is the quality of management? Is this management competent? Is this management ethical? That I think is very so. These are the three big factors which one has to keep in mind while investing. And this is what we try to look for or try to search for when we are evaluating companies. And I think whether it is a private company or a PSU company, what matters essentially are the same tenets, which is a high quality business backed by a strong balance sheet and run by a very able, competent, and an ethical management.
Okay, so just hearing how you all decide to invest, it's very unique and it's something that I've not seen a lot of in the public sector. So I just wanted to know, how do you all do your market research to find out which company is competent enough, which company has good management, and which company you think is going to succeed in the long run?
I think we have to have our ears on the ground. We need to essentially keep assessing what is the consumer's acceptability or consumer's receptivity to a company and its products. How do its distributors, its dealers, people who stock their products, how do they think about these products? Why do they keep these products, and what makes them push these products to their consumers? So I think ground feedback, channel checks, talking to distributors, talking to dealers, talking to companies, competitors in terms of what competitors think about them. I think these are all very essential ingredients of a research process, which keeps you attuned as to what keeps this company and its products ahead in the marketplace. I think that's the first point. The second is to look at all the financial parameters. How good are the company's financials? What essentially, as I mentioned earlier, at what rate have the revenues grown? At what rate has the business grown? How steady have been the margins? What are the kind of cash flows which the business has generated? And is the business less dependent on debt? These are some of the other factors which one keeps into mind. So I think again, first is to keep understanding the business and see how the products are doing. And second is to keep understanding the balance sheet. I think these are the two kind of tenets of finding up or landing up with a good investment.
Okay, so one more thing that Envision's philosophy dictates is using the bottom-up approach. So, in simple terms, can you explain what the bottom-up approach actually means and why your company uses it?
So there are two approaches. Where one is the top-down approach, which essentially you just say that I like a particular sector and therefore I will invest a lot into that sector. That is one approach. Or you just essentially say I'm going to own these 10 sectors, and in those 10 sectors I will own the top three companies in those 10 sectors. That is called a top-down approach.
Yes.
A bottom-up approach saying is that it doesn't matter what sector a company is in. What is more important is the company in which you invest. And so even if the sector has not the best of prospects, but within that, if you kind of can come across a reasonably good company, which essentially is good on all the parameters that I mentioned to you earlier about, like business, balance sheet, quality of management, and a reasonable price, then it merits to be a good investment. And that's what essentially is a bottom up kind of an approach. So a top down approach believes in more the sector, the bottom up approach believes more in the individual company.
Okay, that's very interesting. And just one more thing before we dive into more of the economy in general. Why do you think Envision Capital has been able to stand up and have so much success in the field of investing? Do you think it was mainly your philosophy? Do you think it was your work ethic, the experience you have? And why do you think you, as an entrepreneur yourself, have been able to do so well in company after company after company?
I think it's a combination of two factors, Shlok. One is, I think, is the philosophy of the firm, the investment philosophy of the firm. I think we essentially believe in investing in high quality companies which have growth potential and which have been able to demonstrate reasonable levels of capital efficiency. So I think that is the starting point, and we believe this will remain our investment philosophy. I think the second thing which goes behind success essentially is the culture of the firm, culture of the team. I think that's essentially a very, very strong, softer aspect, which helps a firm to get off the ground, which helps the firm to scale, and it helps the firm to succeed in the very long term and build for sustainability. I think the most underrated factor behind sustainability is the culture of the firm.
Culture.
And
Yeah.
we clearly believe, I would like to describe our culture as me, which is M for merit, E for ethics, and E again for empathy. This to me describes essentially the culture, that we have a culture of merit, of ethics, and empathy. And I think this is something which will help us to sustain for the very long term, and we continue to be successful in the long term.
Okay, so talking about it was very interesting when you spoke about the culture of your firm. And one thing that's happening a lot in India is the newer Indian companies are diverting from the old typical Indian setting of an office, of a corporate office, to more the quote unquote foreign startup ecosystem wherein culture is very important in your businesses, or wherein all the employees are treated more like family, where there are more where you'll have meetings, gatherings, and where basically all the it is a more fun and better work environment. So why do you think a lot of these companies have started to adapt this? Do you think it's better for Indian companies to start adapting sort of this more foreign startup ecosystem? And do you think this would lead this is like one of the first steps to India opening itself up and to India's startup culture and India's work culture getting much better from what it currently is?
I think for any firm, any business, any company to be very successful, like what I said, the culture I think is extremely important. I think going forward it will become even more important, and not because this is necessarily worked in foreign countries or with foreign companies or with foreign startups, but I clearly believe that in India this is the way forward, and that's because, Shlo, the future leaders of this country, the future workforce of this country are going to be people from your age group. 5 years, 10 years away, it is the complexion of our talent and the complexion of our leaders and the complexion of our workforce is going to be very different from what it was 10 years ago. And that, I think, your cohort, this cohort of very young people is surely a lot more aspirational and is a lot more well informed and is a lot more agile and alert to the changing environment. And I think this cohort will always and always prefer a workplace which is more fun to work at, and which basically looks at the workplace more like an extended home. And therefore, I think this is going to be the imperative that corporate India will have to necessarily pivot towards. If you do not pivot towards this, you will see different category of winners emerge in the corporate landscape of India.
Okay, so one more question about the fact that you talked about that most of the Indian generation is a younger age. So do you think it is important for children, especially in India, to become more educated about finances specifically from a young age, and why or why not do you think it is important?
It is extremely important. I clearly believe that somebody who's financially prudent and financially independent I think will probably be more successful in life versus somebody who is careless about his finances or is less prudent about his finances. And therefore, understanding finances and how investments work, I think are going to be very, very important. Another thing, Shlok, which I would like to highlight is that going forward, you're going to see unprecedented culture of entrepreneurship and wealth creation in India. And earning money is difficult, but managing money is even more difficult. So I think that is why going forward, understanding your finances and being prudent about your finances is going to be inevitable.
Okay, and just to talk more about the economy in general, now, at least for the past 1.5 years, the main thing that everyone is being scared of is that there is going to be another global recession, there's going to be another global recession, and there's going to be another global recession. Like everywhere on the news, when we read, in America, the markets are struggling, inflation is at an all-time high. In UK, there's a cost of living crisis going on. Inflation again is at an all-time high. The country has almost gone into a recession. It is receding. And why do you think, compared to all these superpowers or quote unquote superpowers, why do you think the Indian market in the past 1.5 years has done so well and has outperformed all the other markets globally? And do you think the repercussions of maybe a possible recession in these Western countries will affect India? Do you think it will affect it in a negative light or in a positive way? And why do you think so?
Look, in the 30 years that I have been in the world of business, the world of investments, there's not been a single year or a single month where there has not been enough discussion on risks and the dangers ahead, right? So I think risks are always inevitable. Dangers are always going to be there lurking around. We live in truly a flat world. We live in a connected world. We live, in fact, in an interconnected world. So, to that extent, what happens the world over surely impacts us. Having said that, I think why India has stood out is because A, of the kind of macroeconomic management which our existing government and the policymakers have been able to do. I, in my career, have never seen India being able to sustain high growth rates with lower levels of inflation versus the United States or Europe. 2022 was exactly that way. We grew substantially higher than the world, but had an inflation which was below the inflation levels that was witnessed in countries like the United States and Europe. And I think I give this credit entirely to our government, to our policymakers, and to the Reserve Bank of India. That is one. Two, I think, is the power of Indian entrepreneurship. I think even in a very challenging environment like the last year or at the start of this year, I think corporate India and Indian businesses have managed to grow and to cope with challenges of inflation, to cope with challenges of higher costs, and still deliver healthy margins, healthy growth in profits, and healthy returns to investors and shareholders. So I think it's a combination, a perfect combination or a perfect partnership between our macros represented by the government and our micros represented by the business, which has finally led to a much superior outcome for India over the last couple of years, and especially in the post-COVID world.
Okay, and just for one last question before we end with this episode, from all your years of running successful company after successful company, can you share three key learnings that have shaped you as a businessman and an entrepreneur that someone who's just entering the fields of either economics or business can learn from?
I'm not too sure about the world of business or economics, but I think uh, there are a few qualities which you probably need to be successful. I think the starting point is be an optimist. Okay. I think believe in the opportunity which India has to offer for the many years and the many decades ahead. So I think first of all, be an optimist. Two is have deep conviction in yourself in terms of what you can do and what your team can do. I think that is the second big prerequisite or a kind of a ingredient which you need to have. And third, I think is financial prudence. I think it's very important whether you are running your business or you're running your personal finances. I think it's important that financial prudence has to be the order of the day. So I think optimism, number one, conviction and prudence are the three qualities that are the three virtues which an individual or an entrepreneur or a professional ought to have to be prepared for a much stronger and a sounder future.
Okay. Thank you so much. This interview was a lot of fun for me.
Thank you so much, Shok.